Imagine it's the year 2032. You sit at your kitchen table, sipping your morning espresso, opening your laptop, and there it is in black and white. Bitcoin has surpassed $1 million. You pause, stunned. A mix of awe and regret floods in. You remember the warnings, the doubts, the headlines claiming Bitcoin was a bubble, too risky, or bound to zero. Yet here it is, reality confirming what you once suspected, but hesitated to act on. What if you could have prepared differently? What if, instead of ignoring the signs, you had understood the forces shaping the financial world? The truth is, the traditional financial system has been stretched to its limits. Governments print money, accumulate debt, and manipulate economies in ways that seem invisible day to day. But the consequences are inevitable. The stage is set for a revolution in money, a shift in wealth, a chance to protect your purchasing power and your life savings. Bitcoin isn't just digital currency. It's the ultimate hedge against a system increasingly dependent on debt, inflation, and uncertainty. In this series, we'll explore why Bitcoin is uniquely positioned to thrive in these conditions, how historical patterns reinforce its trajectory, and why institutional adoption is accelerating at unprecedented speed. By the end, you'll understand the reality behind the headlines, and why now might be the most critical moment to act in the evolving financial landscape. The financial world we rely on every day is far from stable. Governments and central banks constantly intervene, creating money out of thin air, while debt levels rise exponentially. Every year, countries borrow more than they earn, covering deficits with new debt rather than real solutions. This cycle isn't temporary. It's built into the system itself. Take the United States, for example. Its national debt exceeds $35 trillion, and the budget deficit continues to grow, regardless of which party is in power. Even countries considered stable, like Germany, face mounting deficits. The result is a fragile system, where inflation slowly erodes purchasing power, and ordinary savings lose value over time. Interest rates, once used to control growth and prevent overheating, now often make matters worse. Raising rates increases the debt burden for governments, forcing them to borrow even more. Meanwhile, massive amounts of idle capital sit in money market funds, waiting for opportunities. But traditional financial instruments are limited and often manipulated by insiders. On a global scale, the system is interconnected and fragile. Crises in one country quickly ripple across borders. Historical patterns show that whenever debt levels and money printing escalate unchecked, markets face crashes, inflation spikes, or currency devaluation. The central problem is clear. The traditional financial system cannot sustain itself indefinitely. It relies on continuous growth, endless borrowing, and artificial manipulation. For anyone seeking to protect wealth or secure purchasing power, relying solely on conventional methods has become increasingly risky. The search for alternatives isn't just prudent, it's essential. Bitcoin offers a fundamentally different approach to money and wealth preservation. Unlike traditional currencies, it is decentralized, limited in supply, and immune to government manipulation. There will only ever be 21 million Bitcoins, making it the ultimate deflationary asset. No central bank can print more, and no politician can inflate it away. This scarcity is crucial in a world where fiat currencies are continuously devalued through printing and debt accumulation. Bitcoin operates independently of borders and political systems. It allows individuals to control their own wealth without relying on banks or governments. Transactions are transparent, verifiable, and secure, making it resistant to corruption or mismanagement. The digital nature of Bitcoin also aligns with modern financial needs. It can be transferred anywhere in the world instantly, without intermediaries or excessive fees. Unlike gold or real estate, it is highly portable, divisible, and accessible to anyone with an internet connection. Institutional adoption is accelerating, and more corporations are recognizing Bitcoin as a reliable store of value. It is not just a speculative asset. It is becoming a cornerstone for long-term wealth protection against inflation and systemic risk. In a world where traditional systems are increasingly unstable, Bitcoin stands out as a hedge against uncertainty. Its built-in scarcity, security, and independence provide a solution for anyone looking to preserve purchasing power and protect their assets in the coming decades. Simply put, Bitcoin is not just digital money. It is a new paradigm for financial freedom and resilience. Bitcoin's performance over the past decade has been nothing short of extraordinary. From its early days, when a single Bitcoin was worth mere cents, to reaching tens of thousands of dollars, it has repeatedly demonstrated its capacity for rapid growth. Even accounting for volatility, its long-term trend has been decisively upward. Historically, Bitcoin has outperformed most traditional asset classes, including stocks, bonds, and precious metals. It has provided early adopters with exponential returns, often surpassing any expectations. The combination of scarcity, growing adoption, and increasing institutional interest has been a key driver of this growth. Looking forward, projections suggest that Bitcoin's upward trajectory is far from over. Analysts and experts consider several factors. Global debt levels continue to rise. Fiat currencies face ongoing inflation, and technological adoption accelerates. These dynamics create a strong tailwind for Bitcoin, positioning it as a potential multi-fold increase over current values within the next decade. For investors, understanding both the historical volatility and the long-term growth potential is essential. While short-term fluctuations are expected, the structural characteristics of Bitcoin, its scarcity, security, and global accessibility, provide a foundation for significant appreciation over time. In essence, Bitcoin's history is proof of concept, and its projected performance points to a compelling future. As traditional financial systems struggle under debt and inflation, Bitcoin emerges as a reliable store of value, combining resilience with growth potential. The evidence suggests that those who understand and strategically invest in Bitcoin today may benefit substantially as the market continues to mature. Bitcoin is no longer just a niche asset for tech enthusiasts or early adopters. Its adoption has expanded across the globe, attracting attention from institutional investors, corporations, and even governments. Major financial institutions are now offering Bitcoin-related services, including ETFs, custody solutions, and trading platforms, signaling a growing mainstream acceptance. Corporations are increasingly adding Bitcoin to their balance sheets as a hedge against inflation and currency devaluation. Companies like MicroStrategy and Tesla have publicly announced significant Bitcoin holdings, showcasing confidence in its long-term value. This corporate adoption not only validates Bitcoin, but also provides liquidity and stability to the market. Institutional acceptance goes hand in hand with regulatory clarity. Governments are gradually creating frameworks to integrate Bitcoin into the financial system, aiming to balance innovation with investor protection. This reduces uncertainty and encourages more significant investment from traditional finance players. Retail adoption continues to expand as well. Payment processors, online platforms, and even some traditional banks now facilitate Bitcoin transactions, making it easier for individuals to buy, sell, and use Bitcoin in everyday life. Increased user adoption strengthens the network and reinforces Bitcoin's status as a digital store of value. Overall, adoption and institutional acceptance are crucial catalysts for Bitcoin's long-term growth. As more entities recognize its potential and integrate it into their financial strategies, the market matures, volatility gradually stabilizes, and the case for Bitcoin as a key component of the global financial system becomes stronger. The combination of broad adoption, corporate investment, and institutional participation sets the stage for a sustainable upward trajectory. Now that you understand the challenges of traditional financial systems and the unique advantages Bitcoin offers, the path forward becomes clear. Bitcoin isn't just another investment. It represents freedom, transparency, and control over your financial future. Its fixed supply and decentralized nature make it resistant to inflation, government interference, and systemic collapse. The historical performance speaks for itself, and growing adoption, from institutional investors to governments, signals that Bitcoin's role in the global economy is only becoming stronger. While markets may remain volatile, the long-term trend points toward greater value and wider acceptance. If you want to protect your wealth, diversify your portfolio, and be part of the next financial revolution, now is the time to act. Study, research, and consider how Bitcoin can fit into your financial strategy. Don't wait until the headlines tell you it's too late. The future of money is here, and understanding it today could make all the difference tomorrow.